Real Estate Investors Property Analyzer enables investors to analyse the total returns for any investment property anywhere in Australia. This can be on the market or off the market. If you have an idea for an address that you'd like to analyse, you can go directly into the tool. Enter the address, the house type, the land area, as well as any other attributes you'd like to customise. From there, you can actually drive an analysis of a property. However, if you're using Investor Search, a lot of the heavy work's already been done for you, directly taken from the sales listing. So let's start there and have a look at how Property Analyzer can be used to analyse the potential returns for a property. Before you get started though, make sure you set your default profile. This is available on the Investor Search screen as well as within Property Analyzer. By going through and clicking on My Default Profile, you're able to set things like how much deposit you're going to pay, what sort of interest rate you're going to pay, some of the other costs associated with buying the property. This information will be used by Property Analyzer to get a more accurate return on terms of both yield and overall capital growth over time. We're now looking at some of the results from Investor Search, and as you can see, there's a snapshot within each result. This shows you the cash flow, potential gross yield, as well as total returns for an investment property. This information is calculated based on what we've entered into our default profile. As we scroll down, we can see each result actually has this table calculated. In some cases, you might see something like the no snapshot table. This isn't an error, it's just that there isn't enough information to calculate accurately what the year 1 and year 10 might look like from a yield and total returns point of view. In that case, you should go through and analyse in full and add the extra information required to calculate what the return might be. What we're going to do is we're going to use this property here in Middleton. And as you can see, it's on the market for $395,000, which is just under 80% of the median price. The median price is $495,000. This is important as we go into Analyser because I'm going to tell you how we use that number to actually calculate the rent potential. Click on Analyse in full. As we come into Property Analyzer, we're given some numbers that we can adjust. The rent per week is shown at $260. The reason why that's important is that it's showing us here that the median rent for a 3-bedroom house in Middleton is actually $265 per week. As we saw, this property was on the market at about 80% of the median. So this is calculated that around $260 might be applicable for this property in terms of a rental return. Of course, if we want to adjust it, we can slide the slider up or down, or we can adjust it manually. Now, it's on the market at $395. Let's just say that we're confident of getting it at a discount. So we'll change that to $375,000. Now, if you think the market value is actually more, you can adjust that here. If you're unsure of what the actual market value is, click on Get Estimate, and this will go off to Australian Property Monitor's My Valuer. My Valuer will then look at all the sold, for sale, for lease, and give you an indication of what the value of that property is. You can then enter it. Down here we have the entity in which this property is going to be purchased. For the purpose of today, we're going to say it's a personal ownership. However, if you have a trust structure set up or a self-managed super fund, you can choose that. Or you can just create a new entity if this is a new property under a new entity that you plan to own. Let's check next. What we've got here now is based on our default profile, all the numbers calculated against some of the things that we've entered, such as what the rent's going to be, as well as what the purchase price and what the overall value is going to be. First thing we can do is set the loan to value ratio target. This is important because if we want to tap into the equity over time, we can decide at what level we're comfortable tapping into that equity. So at 80%, if it falls below 80% in terms of loan to value ratio, Real Estate Investor is going to calculate that you can access that equity in some of the numbers you're about to see. You can see some summary inputs, some of the information that's been taken. We're going to buy it at $375. The deposit's going to be $100,000. 10-year total growth is expected to be 56%, and the loan cost is going to be $300 to set it up. As we scroll down, we can see today, years 1, 3, 5, and 10. We can have a look at some of the statistics, some of the cash deductions, things like what the loan costs are going to be, any depreciation if applicable, And down the bottom, we're actually going to see the pre-tax cash flow, both on a per annum and per week basis. As we scroll down, depreciation is calculated, the deductions are calculated based on our tax rate in which we entered in the entity, and then we're finally going to be able to see what it's going to look like from a before and after tax basis. So in this example, after year 10, we're looking at a cash flow of about $23 per week. If I scroll down the bottom, I can go to the graph view. This shows me, over time, who's actually paying for the property, how much your input is, how much the taxman's input is, and what the tenant's going to pay. We can scroll down and have a look at the market value versus the loan. We've put an interest-only loan on the default profile today, so it's not declining. But if it was principal plus interest, you'd see that start to decline. You can see the growth over time. This is factoring in both the capital growth and CPI inflation. We can also see what the cash flow is going to look like. So in years 1, it's fairly negative, but as we get into year 10, we've moved into positive territory. We can click Summary. Summary is going to take us into a single view for that property. What we've built here is a picture taken from the listing. We can see that it's a house, 3 bedroom, 1 bathroom with no cars, and see what the land size is. We can have a look at the snapshot for this property based on everything we've configured. So in year 1 it's negative, but in year 10 it moves into a positive territory. We can see what the gross yield and the net yield is over time, and we can look at what the total returns are. As we scroll down, we can see a bit of information about the market statistics. We can see some of the notes and documents associated to the property if we've attached them. We can have a look at all the sales listings and rental listings in and around that suburb, as well as some of the postcode statistics as well. So really what we've done here is we've analysed a property, we've understood what the cash flow is going to be, what the gross is going to be, what the tax is going to be, and we've built a unique page that we can now save to our portfolio and come back to and look at any time. So we'll click Add to Saved, and we've saved that property. This has been Property Analyzer, a bit of a view on what you can do with it. We hope it's been of benefit.